Every age has its financial darlings. Today, it's trillion-dollar tech companies and fintech unicorns that promise to make money move at the speed of light. Their founders wear hoodies instead of suits, talk about disruption, decentralization, frictionless payments. 800 years ago, the hottest startup in Europe didn't write code. It carried swords. It wore white cloaks. It took vows of poverty. Kings begged it for loans. Merchants trusted it with their fortunes. Popes granted it privileges no modern bank has ever enjoyed. You know it as the Knights Templar. But for 2 centuries, they were something else. A financial powerhouse, a medieval treasury network so trusted, so global, and so deeply embedded into the machinery of power that for a while, they were the closest thing the Middle Ages ever had to a fintech unicorn. And then, in a single coordinated strike, its leaders were arrested, its assets seized, and its brand burned to the ground. Welcome to Empire Ledger, where money, power, and history collide, and nothing is ever as simple as it looks. When most people hear Knights Templar, they imagine Crusader knights riding out under the burning Levantine sun, secret relics, underground cults, or some Hollywood chase scene involving a hidden treasure map, swords, sand, and superstition. What almost nobody thinks about is paperwork. But the Templars were obsessed with it. Behind the armor and the legends, they built one of the first truly international financial networks in history. They moved money across borders centuries before wire transfers. They ran secure vaults before private banking was a profession. They funded wars, audited kings, and quietly turned religious trust into financial power. They weren't just warriors of Christ. They were the treasury of Christ. They were the Templar Treasury. So how do you get from a handful of poor knights in Jerusalem to a financial empire that even kings feared? And more importantly, what happens when a state decides that the easiest way to solve its debt problem is to destroy its own bank? To understand that, you have to start with Europe's most dangerous journey. In the 12th century, going on pilgrimage to Jerusalem wasn't a spiritual vacation. It was a calculated risk. If you were a wealthy noble in France or England who wanted to visit the Holy Sepulchre, you faced a simple, brutal problem. You needed money for months of travel, food, lodging, bribes, maybe even mercenaries. But to carry that money, you had to drag heavy silver and gold across bandit-infested roads, pirate-haunted seas, and territories where the law was whatever the local warlord decided that day. Coins didn't just represent wealth, they advertised it. Every clink from your saddlebag was a beacon saying, "Rob me." If you made it to Jerusalem alive, that was a miracle. If your money made it too, that was an even bigger one. Somewhere in this lethal supply chain of faith and coin, a group of knights saw an opportunity. They called themselves the poor fellow soldiers of Christ and of the Temple of Solomon, the Knights Templar. At first, their pitch was simple and almost noble. We will protect pilgrims on the road. It was a security product. But over time, something more subtle and far more powerful evolved. They realized that protecting pilgrims' bodies was only half the problem. The real vulnerability was their money. What if the pilgrim didn't have to carry it at all? So they started building something that looked suspiciously like a modern financial startup. Local houses, called commanderies, spread across Europe and the Holy Land. A strict internal rulebook. A recognizable brand, warrior monks, sworn to poverty, blessed by the church. Their first and most important product wasn't a weapon. It was trust. Here's how it worked in practice. A nobleman in Paris decides to go on pilgrimage. Instead of loading a wagon with coins and hiring extra guards, he rides to the local Templar house. He hands his treasure over to men who wear armor but live like monks. In return, he receives a written document, a kind of receipt, encoded, marked, and recorded. Then he travels. He crosses mountains, seas, kingdoms. He passes through lands ruled by people who don't even speak his language. He's robbed, maybe, shaken down at checkpoints, harassed by opportunists. But that's all right, because the real money isn't with him. It's sitting in a Templar vault hundreds of miles away. When he finally reaches Jerusalem or Acre, he walks into another Templar house, presents his document, and the brothers there check it against their records. They verify the marks, the code, the amounts, and then they pay him out in local coins, minus a fee for the service. He has just moved wealth across continents using nothing but ink, parchment, and an institution people were too scared and too pious to cheat. They had turned money into information. Coin in Paris became written on paper. Writing on paper became a coin again in Jerusalem. No telegraph, no Swift code, no blockchain. Just an internal network of disciplined clerks, sealed letters, and the fear of God hanging over anyone who tampered with the system. If you squint, you can see the outlines of modern banking right there. Deposit in one branch, withdraw at another, pay a fee. Trust the network. That single innovation, primitive, clumsy, fragile by modern standards, solved the biggest financial bottleneck of the medieval Christian world, the problem of moving large sums safely across long distances. And like every good financial innovation, once it existed, people wanted more. If you can move money, they reasoned, you can also store it. If you can store it, you can also safeguard important documents. If you can safeguard those, you can mediate disputes over who owns what. And if everyone trusts you to mediate those disputes, why not lend money as well? So the Templar Treasury began to grow roots. Their houses became de facto vaults for nobles, merchants, and even other religious institutions. Landlords deposited rents. Bishops stored church wealth. Royals parked emergency funds in their strong rooms. Over time, the order didn't just control castles and farms, it controlled cash flows. Their network of commanderies, from England and France to Spain, Italy, and the Crusader states, functioned as a kind of medieval branch banking system. Internal couriers moved letters and tallies. Ledgers in one city were reconciled with ledgers in another. They may not have had spreadsheets, but they had something just as important: procedures. In an age when most accounting was a pile of loose notes in a chest, the Templars were professional. If you were a medieval ruler, this was irresistible. Here was an organization that was international, with houses in many of your neighbors' lands. Disciplined, with rules enforced by religious vows. Semi-independent, answering directly to the Pope, not to local petty rivals. And widely believed to be incorruptible, or at least less corrupt than your own officials. They had something more valuable than gold: credibility. Remember, this was a world where rulers regularly debased coinage, shaving silver, mixing base metals into gold, manipulating the currency whenever they needed short-term relief. People learned to distrust the king's money, but a Templar house, with its stone walls, its chapel, and its armed brothers, that felt solid. If your wealth was sitting in a chest under your bed, it could be stolen in the night. If it was under royal guard, it could be borrowed in the name of the crown. Under the Templar cross, at least in theory, it was under the protection of God. That's not just faith, that's the brand. One of the clearest examples sits in London. The Templars built a circular church there, modeled after the Holy Sepulchre in Jerusalem. But the temple in London wasn't just a religious building. For a time, it served as a royal treasury. The King of England stored the crown's money there, in the house of a private religious order. Imagine a modern government moving its central bank or S reserves into a vault run by a private company and letting that company's executives hold the keys. It sounds absurd. In the 13th century, it was reality. Across Europe, the pattern repeated. French kings borrowed heavily from the Templars. Nobles mortgaged land and titles in exchange for Templar credit. Cities used them as neutral intermediaries. Even other monastic orders used Templar houses to move their funds. On paper, we can't calculate their market cap in modern terms, but functionally, they had all the hallmarks of a unicorn. A scalable model, more houses meant more deposits and more fees, a defensible moat, religious trust, papal backing, military force, network effects. Each new branch made the system more useful to everyone already plugged into it. And most importantly, a client list that went straight to the top of the political food chain. And like many unicorns, they had a concentration problem. Their best customers were also their greatest threat. By the early 14th century, one man in particular had a Templar problem: King Philip IV of France, known as Philip the Fair. Philip was tall, elegant, and almost permanently short of cash. He fought wars he couldn't really afford. He squeezed his subjects with taxes. He quarreled with the Pope. At one point, he even expelled and plundered the Jews of France to grab their assets. He was not squeamish about using power to refill his treasury, and he owed the Templars a lot of money. Imagine owing your biggest lender so much that you know, deep down, you'll never really pay it back. Imagine that lender has fortified properties all across your realm, loyal only to their own order and to a distant pope. Imagine they have better books than your own officials. In some places, they are more trusted than your own crown. That's not just a creditor, that's a rival. In the cold logic of medieval monarchy, there was a simple solution to an overmighty creditor. If you can't pay them, you destroy them. On Friday, October 13th, 1307, Philip made his move. Royal agents fanned out across France at dawn with sealed orders. Templar houses were raided, knights and sergeants were arrested, their papers and chests were seized. The whole operation was timed so nobody could warn anyone else. The charges were lurid, heresy, idolatry, spitting on the cross, denying Christ, secret obscene rituals, worshipping a mysterious head. The kind of accusations designed not just to justify prosecution, but to horrify ordinary believers. Under torture, some confessed. Many would have confessed to anything. Others held out and paid the price on the pyre. Did the Templars have strange internal customs, odd initiation rites, symbols outsiders didn't understand? Almost certainly. Every closed organization does. But look at what followed the arrests. Their property was frozen. Their banking operation was paralyzed. Their debts to the French crown were suddenly negotiable. Much of their wealth was redistributed. Officially, many of their assets were supposed to be transferred to another order, the Hospitallers. In practice, significant chunks simply disappeared into royal and noble hands. The timing, the coordination, the financial outcome, None of it looks like a spontaneous crusade for doctrinal purity. It looks like a hostile takeover with extra steps. The Templar Treasury was dismantled not because the model stopped working, but because the model worked too well for a private network in a world of jealous kings. Their balance sheet had outgrown their political protection. Strip away the smoke and the torture confessions, and you see a clear pattern. A state using moral panic to solve a fiscal problem. So what did the Templars actually leave behind? Not a secret vault under some church, not a magic relic that grants endless wealth. Their real legacy is more mundane and more powerful. First, they proved that you could build an international financial network on reputation and rules rather than blood ties alone. Italian banking families would later refine that model, but the Templars showed that an organization spread across many countries could act coherently as a single financial entity. Second, they normalized the idea that you could deposit money in one place and retrieve it somewhere else, using nothing but a written instrument and trust in the issuer. That principle survives today in checks, bank drafts, credit cards, and digital payments. Money as portable information, not just metal in a sack. Third, they demonstrated the dangerous attraction of lending to governments. When your client is a king, the upside looks limitless, until the moment he decides that your continued existence is more costly than your balance sheet is worth. And finally, they expose the oldest risk that never quite makes it onto the neat charts and ratios in a bank's annual report: political risk. Not the risk of a law changing slowly after debate, but the risk that power changes its mind overnight. If you become essential enough to the functioning of a society, the line between partner of the state and problem for the state can flip in an instant. The Templars never issued a manifesto challenging royal authority. They didn't need to. Their castle vaults full of other people's money sent the message for them. And when that message collided with Philip's desperation, the result was fire. So why should you care about a medieval unicorn? Because the pattern hasn't gone away. Today, when a tech company becomes the de facto infrastructure of communication, when a payment processor becomes the gatekeeper of commerce, when a new digital currency starts to feel more real than official money for millions of people, governments pay attention. They regulate. They are under pressure. They co-opt. And sometimes, if they feel genuinely threatened, they crush. The battlefield has moved from stone temples to server farms. The weapons have changed from swords to subpoenas and sanctions. But the underlying conflict is the same. Who gets to control trust? For 2 centuries, the answer for much of Latin Christendom was those warrior monks with the Red Cross. People trusted them more than kings, more than most bishops, more than local lords. Then, in one generation, the crown and the papacy decided they were too powerful, and the answer changed. You don't have to wear a cloak or carry a sword to be caught in that shift. You just have to build or rely on a system that seems so solid, so essential, that you forget one uncomfortable truth. Its survival depends on forces you don't control. Medieval nobles trusted the Templars. They had good reasons. The order had a long track record. It had military strength, it had divine branding, it had the blessing of Rome. And yet, one morning, those nobles woke up to find that the institution they trusted had been declared heretical. Its leaders imprisoned, its assets seized, its promises suddenly uncertain. We like to think that could never happen now. We have courts, laws, rights, processes. History suggests a quieter, harsher answer. It has happened in different forms again and again. When states are desperate, legality becomes flexible. The story of the Templar Treasury isn't a mystery novel about buried gold. It's a case study in how fast a trusted financial keystone can be built, and how fast it can be smashed when it collides with political necessity. They turned piety into a business model. They turned roads full of bandits into payment rails. They turned trust into money. For that, they became the medieval world's first great financial unicorn. For that, they were also wiped out. So the next time a politician promises unbreakable financial stability, or a startup promises to revolutionize money, or a bank assures you that your wealth is safe forever, remember the Templars. Remember the warriors of Christ who became the bankers of kings. Remember the king who solved his debt problem by killing his own bank. And remember that, in the long run, the only thing more powerful than money is the power to decide whose money is allowed to exist. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.